Good evening, ladies and gentlemen. So I wanted to change it up a little bit and give you a strategy that I think most of you will enjoy utilizing. Now, I normally on a Saturday do a written post, but I want to try and keep this video as short as possible and kill two birds with one stone and give you my projections for Bitcoin going into next week. All right. Firstly, the strategy that I'm going to be talking about is based on the 5-minute time frame, but it can be utilized on higher time frames. You just have to wait a little bit longer. But before we get into that, let me just break it all down for you on what the story is. So, 4-hour time frame, Bitcoin has been holding up at these highs, and you can see it's been kind of treacherous inside of this zone, and we are all waiting for the retrace. That's if the retrace happens. Now, Bitcoin does have a lot of strength, and it looks like a promise that it wants to try and move higher, which might actually happen in the Asian session going into Monday. Now, remember, there isn't a holiday. Well, there's a holiday in Japan on Monday night. Okay, so where is it? Right here. Monday night, from Sunday going into Monday, Japan will be closed. So we're going to be down a pool of liquidity anyway. But then, of course, as we go into the week, we're all going to be getting ready for the FOMC projections and the Fed statement. Quite frankly, Bitcoin is most likely going to be staying around these zones. It might move down a little bit. I expect it to come back down later on, going into the psychological ranges. The only reason being is because right here on the Atos platform, I've got this area right there. And then when we go in closer and closer, we can see that this is on the 4-hour time frame. You can see that you have got an influx of liquidity inside of this zone. Now, the way we highlight this is we then go over into the vector candles, and you can see the wick right there. They've got 2 wicks inside of this zone. This was a manipulative play. This was an attempt to just stab the liquidity, take back the vector zones to the left of the chart, and then bring it back up again and shake out retail traders. Now, the psychological ranges are starting to form. So you are, in essence, waiting for the first high and the first low to be established. Once they hit the first high and then continue to trade away from it, the longer it takes for them to get back towards the high, we would assume that it's going to be locked. It usually takes around 4 hours from now. So going into the start of the Asian session in principle. So we're going to be waiting for those areas to hold. Now, I know some of you are going to want to try and take advantage of this, of the plays, but just be very careful because we are in very, very treacherous times, and you can see that as bright as day with the manipulative move that they did earlier on today. Okay, now what's this strategy that I'm talking about? So as it stands right now, just for the reference, see, this is the zone that we're projecting, and this is where we are right now. So it's a little bit higher, but the context is still there. What are we expecting? We are expecting another move up. We're waiting to see if they can come and attack the 28 zone. How do we justify the attack of the 28 region? Go to the 4-hour time frame, look left, and you'll see that we are in vector candle regions themselves. And you can see that on the volume profile, we are in imbalance zone. So look at price, 27.31, and then go over to the left and you can see 15K, 10K, 10K on the volume profile. The next bout of liquidity would sit inside of this area. So we would project Bitcoin to come up towards this area because that is where value sits. So they're going to naturally want to attack that area. So we would ultimately expect the 30K region if we're going to go by the high volume nodes, which is the biggest volume area in this profile. All right. So that would be our next point that we would need to be very careful of. Now, going into the higher timeframes, you can see that the 800 EMA price is above that on the 4-hour time frame, but we go to the daily and we see that the daily is at, or tried to test that 800 EMA, the first time in a very long time. All right. And you can see we've recovered the imbalance zone right there. And this is the last area that Bitcoin would initially find its true support if it's going to buck the trend and continue to move higher on the hedge against what's going on in the US with the economy and the situation with banks. So from now, probably up until the FOMC, we would project Bitcoin to try and reach that 30K zone. Prior to that, what I'm expecting Bitcoin to do, or should I say, let me give you this strategy. So this strategy is for my short-term day traders. what I want to draw your attention to are these boxes. Now, this is for the person that there has to be such discipline to trade this, all right? But the three aspects to this are right here. Where is my little written thing? I can't pause my videos. That's why you see all these little delays. So the first thing that we need to consider is structure of the chart. We then need to understand the sentiment, and then we need to work out knowing the unknown. How do you know the unknown? Well, this is what you're doing. You are continuously trading the unknown. You don't know if the trade that you open is going to be profitable. Neither do you know if it's going to go up or down. You are trading the unknown. And if you are in acceptance of that, you then don't allow emotions to come into play because you've accepted that it can go wrong. The only thing you know is it can go wrong for you. If it goes right for you, it's a bonus. The way trading works, guys, is about being able to grab the liquidity or the momentum at specific times. And if you are in the right trade, you'll profit from it. If you're not, you kill the trade, change direction, see what left of the momentum you can grab. Some of the world's best traders are happy with catching the last 10% of a move or the first 10% of a move. They're not interested in anything else after that. Now, look at this structure that I want to dive into with you. This is a 5-minute strategy, does require a bit of patience, but what's the common theme that you see with this? You see vector candles appearing above the moving averages. That's the first classification. You need to see vectors. 1, green or red vectors must be present, okay? The next classification is variance from the moving average. So you have to have price moving away from the 50 EMA. Now, I say to you, don't trade off the 50 EMA on the 5-minute time frame. Look towards the 200 or the 800 EMA. But if the move is sustained and it does move aggressively away from the 50, happy days. You see this move right here? That wouldn't be something you trade, and you'll understand why. You can see here that the move has happened and it's moved away from the 50 and started to play on the 5 and 13 EMA. So you need deviation away from the 50, okay? That's what you need. There has to be a gap inside of this area to the upside and to the downside. If you're looking for, if you're looking to play longs, it needs to be to the downside. So you have to have a gap, all right? If you can't draw at least a square inside of that area, it means the volatility isn't there. Here's an example. You see this area? It's too small. It's too close to the 50. You see prices just stabilizing like that. You run a short inside of that area to only score into the green vector, it might be a bit of a problem for you. The wider the move from the 50 EMA, the more chance it has at coming back down, because all you're trading off this strategy is the return to the vectors. You're trading towards vectors. So here is a classic example of it, this structure right here. First, green or red vectors, I've got green vector candles. Happy days. There's one area there. Area that I can expect price to come back into. They came back into it right here, but they also left a wick. All right? Then, price is moving up. So you are alerted by the vector that something is starting. All right? It moves up. Happy days. And it continues. Now, you see the time that it has happened. It's in the UK session. And then you see Bitcoin come back up towards an area of resistance. So then that takes me back towards the logic of structure and context of the market. So we put this up here. Let me bring it closer. Happy days. So structure of the chart, you've got your green vectors, deviations away from the 50. Sentiment, we know that things may be looking promising to go to the upside because Bitcoin has been moving up or, in essence, moving down, depending on the asset you're trading. And then once you've got that established, you are then trading towards the vectors that have yet to be recovered. How do we understand the context of the market to give us the logic that it's going to do that? And how do we not know it's going to continue higher? Well, I'm talking in hindsight. But I guarantee to you, you go back in the chart, you will see that if Bitcoin's made a big move to the upside and it's consolidating sideways, you will see this behavior. Up, down, up, down, up, down. Okay? They're continuing with the flavor. You look left, you'll see that they are attacking previous areas of liquidity. All right? This was news announcements. Too tricky for us to play. All right? Here's this area. You can see that is awkward volatility because the 50 EMA is pretty close to price and it was such a fast move back up. And look at the time it was. It was during the Asian session at the start of it. This is the best time to trade this is when the UK and the US sessions are open because that's where you're going to get the true wholesome volatility. Okay? If you remember, on Friday, we played into this area here. Trading back into the vectors. First green vector candle above the 50 EMA. Done. Have you got the movement up? Yes. Happy days. Have they recovered the vectors? They left one vector right there, but the strength was present when they recovered this zone. Notice how they come back into this red vector wick, snap, and shift out. Okay? This is where you've got to be careful. This is knowing the unknown. When you see this sort of structure here, where you've got a green vector candle and then you've got a stopping volume candle, at some point, they're going to want to attack that area. Go back in the charts and tell me you see this situation, and I promise you, you will find it and they will come and attack it at some point. They will always come and attack this, all right? Even down to this point, look at that. Green vector candle right there, bang. So you've missed out on this move to the upside. Are you going to start feeling bad? No, because the same logic of this strategy where you are trading the context of the vectors. So you see green vector candles to the upside, deviation away from the moving average. You're going to wait and anticipate them to come back down in towards those vector candles. You look left. Are they coming back from an area of support of resistance? This is where you are reading the structure of the chart. This is the sentiment. Why is it they come up towards that point? They sell from it. Come up towards that point, sell from it. Come up towards that point, sell from it. But set the trap to continue back up. They've broken the region and come away from that zone. Okay? If you see that, if you're in a situation where you've seen, okay, I've got green vector candles, I'm getting ready to go short, but it keeps on going higher and higher. What clues can you find? Here they are. Red vector candle wick. They're coming back to it. Bang, they move up. And you're waiting now. You've got your volatility. You've got price moving away from the 50. So as you see, blue vectors, you are encouraging price to continue higher and higher and higher. You want it to go higher because you've now caught the trap. You've caught the move by the market maker because he's now inducing traders to come into the chart. Look at this. All these vectors are retails coming in. Where's our box? There it is. It's passing the criteria. I've got green vector candles. I'm naturally expecting price to come back in and eat the liquidity. What time was that at? Well, that was at 1 o'clock in the afternoon, New York time, well, pre-New York session. And then we go into the rest of the day. London closes. They no longer add to the liquidity. No more guys who are trying to push price higher. Market maker then says, yippee-ki-yay. First red vector candle below the 50 EMA. Happy days. You either go with this one or you can go with this one for more security. And then bang, wait for the retrace. Continuation to the downside. They come back and eat the vector candles. This is what you're looking for. And this is why I say it's going to take a little bit of discipline to do so because you are waiting for the presence of vectors. All right? We go back into the chart, try and find a couple of more scenarios. Here you go. So you've got the deviation away from the 50 EMA. Brilliant. There it is. There's a little box right there. Cool. But they're holding at the 200 EMA. Stopping volume candle. What did we say earlier on? They're going to come back and check that. Bang. They checked it. Nice little W formation. We look left and we say, okay, where could price end up where they can grab the most amount of liquidity? Bang, we take that zone, support, there's your structure, cool. So you are in essence anticipating that price is going to try and come back up towards this zone and break this area. First green vector candle above the 50, happy days. It moves up. Look at the violet vector candle right there, the stopping volume candle. Remember what we just said a few moments ago? There it is. They're coming back into it. So when you see that candle, you're going to be expecting them to come up. If they can't break beyond a certain structure, you would then run your longs inside of this area. You set your stop below the structure. So you would say, okay, not here. If I run along from here, I'm not going to set it beyond this point. I'm going to set it beyond this point. Or if you want to be really more risk savvy, you go beyond the whole structure that they moved away from. And you give it a lot of freedom to do the movement. Because you'll be absorbing the idea that they would try and come back down into this zone at some stage. But they're not. Why? We look left. They've got the vector candle zones right there. Cool. Remember what we said about the violet red vector candle, the wick? Well, where else can you see it? Bang, right there. They come back into it. Cool. Bang, right there. They come back into it. There it is. Red vector wick. Bang. And what you don't know, and this is where it goes to the idea of trading, knowing the unknown. Notice how this red vector wick right here started price to continue higher. Then they gave you the clue that they're going to come back to this zone later. So you'll be preparing yourself and you'll be saying, right, I'm going to wait and see if price can hold this zone. I'm looking at the chart down below and I'm thinking, okay, where's the last point in the chart where I'm able to say, right, how can I anticipate price is going to go to one point to the next? Again, knowing the unknown. Well, we look at the chart here and we say, okay, so here is a zone where I expect support to come into play. Cool. Look what they did. They come back down. Confluence, 200 EMA, 9:30 in the morning UK time. Bang, you've got movement, support, stopping volume candle, up it goes. You're trading towards the next form of structure. This is all about helping you understand the story of structure. Rather than just focusing exclusively on how it moves, you've got to try and make yourself aware as to how it could move if a certain structure is in place. Now, this is just Bitcoin on Monday, okay? Going to another area. Let's have the same conversation again. Now, you can see Bitcoin has been trading, holding inside of this area. So naturally, we assume we've got nothing for us. Why? Because the moving averages are flat. There's nothing for us to do. So again, this is where I say to you, this is where patience comes into play, okay? Now you've got the volatility. Bang, Bitcoin shifts up. Right, okay. What am I waiting for? Well, I'm waiting for Bitcoin to give me some more vector candles. So it gives you the vector candles. And you're paying attention to this area here because you're in the belief that it's going to come back down towards that zone. Okay? As it's moving up, you see that it comes back down again, and then it makes another move up again. When you start seeing the vector candles that are selling from the highest point, but they do not break the moving average, that is a sign of strength. Because you're going to say to yourself, well, how did you not know? How would you know that it's not going to come back into this vector candle zone? You don't. That's the thing. And that's what you say. You play the game. You say, right, I'm going to run along from here because the logic says to me that if the red vector candle can't break down and push price lower, I wait for the candlestick afterwards to confirm that. And then if the next candlestick can continue up, I'm going to be on the bias that they're going to be trading back into what? Back into the vector candle region right there. Okay, cool. So you run your long from there. You then place a stop down below either this structure here if you want to be really tight or beyond this area right here. Cool. So we zoom out. We have a look at the structure inside of that area. Well, what have we got? If we just see that before this big green vector candle and we look at the wick, we look left and we see we got a red vector candle zone. So where are we trading towards? We're trading towards the last point of interest in the chart. Again, structure. Okay? There is no indefinite approach to how to trade the hybrid system because everyone's going to see things differently. But it's all about how you conceptualize the idea of what is going on. Take what I'm doing or the breakdown of what I've just said and go and apply it into a different asset. Go and apply it into a different time of day for Bitcoin. And you'll just see that you're having the same conversation over and over again. You're looking for structure. You're looking for movement away from the 50. Okay? You're expecting a deviation back down into the 50 EMA. You would have got it from that point because it was such a bold move. Now, if it doesn't recover the full vector candle zone, then at some point you're going to expect them to come back into it. Okay? Now, in this instance, Bitcoin hasn't come back down into towards the 20K zone. So it's moved away from that area. So then what you're doing is you're in essence changing you're changing your decision-making process as and when the chart presents itself. You've got you've got the inventory of the hybrid system. So at what point are you going to be applying it? You know, if you're going to fix a car, you're going to go and have a look. What's the problem with your car, my friend? Right? It makes this clicking noise. Okay, then what do I need to do? I need to open the boot. Cool, you've opened the boot. You're having a look. You're still hearing the clicking noise. You get your chisels, you get your spanners, you get all the stuff to try and work out what the issue is. Okay? And then after trial and error, you come to the understanding that it could be maybe the timing chain. And you're going to play around with the timing chain. Now you've got into the timing chain. You've realized that the timing chain is missing a beat or so. And then you say, right, okay, I think I've got the issue right now. What tools am I going to use for that? So the mechanic has his tools. You're all mechanics of the hybrid system. It's just which tool you're going to pull and try and apply to the chart at the same time. You have a problem. Okay, so when you're looking at the chart from this perspective, you're going to say to yourself, well, How can I anticipate that price is going to go higher? How do I not know it's going to go down lower? You got the stopping volume candles right here. You got the moving averages. And when you place your trade, that's all you can do. You place your trade, set your risk parameters, and say, right, that's where I'm going to exit my trade. And then you you see the trade play out in your favor. Bang, you've made money because you've conceptualized the area. You know you're coming back into these vector candle points right here. They're going to do it because if they haven't broken away from this area and they've pulled away from it, it means that this same zone right here has got the same interest. So market maker wants to market up higher. You get more clues right here with the violet vector candle. Stopping volume candle right there, coming in. Every single vector candle is a clue that the market maker's stepping in. All right? Every clue is by the market maker. Red vector candles pushing retail traders to go short. Once they've trapped enough traders in that area to go short, he brings it back up and hits their liquidations, but also makes them think at the same time that they might be in for another run to the downside because this area is resistance. You're looking at this vector candle. Ain't no retail trader looking at that zone. They ain't thinking about that area because they'll look at it and say, oh, okay, look, I've got 1, I've got 2, I've got 3 hits to the high. That is clear resistance. Okay? And then when they move up towards that zone, they're going to be in their shorts and holding on to them because they think that this is a resistance. It's hit it once, twice, 3, 4 times. And that's what they say in technical analysis. Once an area has been hit 3 times, see it as resistance or support, a strong area of resistance and support. Well, market maker did solidify that because if you look here and you mark off this line, you will see at the high of this candlestick right here, they gave that fruition. They gave the retail trader that belief. That's why they aggressively come down to make them believe that price was going to go lower. But they didn't break the 5 and 13 EMA. They didn't break the 50 EMA. The violet vector candle on the sell-off did not get below the 50 EMA. That's strength because you're aware that market maker is trying to get retail to believe this is an area to sell from. Once you have enough traders inside of this area that you can grab, or in essence, trap into the belief that you are going to sell from this zone, that's why it aggressively escapes from that area because he doesn't want the retail trader. He needs to get the retail trader to sell his position by buying them back up. Remember, when you sell short, you buy to cover, and this is what created an influx of orders to the upside to buy, which those same traders that were trapped in shorts closed off their shorts, brought to cover, and then brought even more because they didn't want to miss out on a move to the upside. This is what I mean about conceptualizing the idea of structure, context, and then trading or knowing the unknown. Because we just never will know fully what the unknown is. But we give ourselves and improve the odds of knowing it by trading the structure and having a complete mind frame or mindset that is always going to be thinking about what the market maker is doing. Forget the structures and just trading off the structures. You're trading the algorithm of market makers. You're trading smart computers. It's your human brain against an algorithm, a very complex algorithm. And you, over time, have come to understand that this algorithm sometimes leaves us clues. We know that it likes to transact by the presence of vectors. We know this. I might sound batshit crazy, ladies and gentlemen, but I've stared enough at these charts to recognize these patterns. Okay? So let's just finalize this all right? And go to Bitcoin's current price action. Let me reset the chart. And let's have a look at what the algorithm's doing right now, all right? So the algorithm, I've got stopping volume candles up here. Okay, right. So let's just conceptualize the whole thing. Here's the one zone right there. Cool. I've also got another zone right here. Cool. Now I've also got this area right here. Fine. I've seen a manipulative move. Well, what day of time? What's the time of day right now? It's a Saturday. Right, markets in principle are closed. So I don't have no New York session. I don't have no UK session. I've just got Bitcoin and the computers working the spreads. Okay, do I want to trade this situation? Oh, no, not really, but let's assume that you do want to trade this situation. So we can see that they're spiking up, spiking up, spiking up, spiking up. They're grabbing retail into the belief of shorts, okay? Because this is happening. They've trapped them, all right? Now we've got these wicks down here. So the logic would suggest, are we going to see Bitcoin attack these zones? to get more traders into the belief that it's now time to go short. They're fighting the shorts. People don't think Bitcoin can sustain this move. That's why you see spikes up, get the shorts in, go back up again. There's your red vector candle wicks. Okay. So we're going to project they're going to come and eat this liquidity. Remember, it's on the 5-minute time frame. Oh, look what we've got. Oh, lovely. We've got another red vector wick. Is that Bitcoin's clue? Because they've done this red vector wick. They've come back up to this zone, recovered that zone. They haven't fully recovered this area. This bold move to the downside shifts price back up, back down again. So we're in anticipation of a zone in this area. So are they going to work this zone first and then move back up towards that zone? Let's anticipate it. But we anticipate Bitcoin to come and eat this liquidity. What it does first is going to be based on whether you've got the discipline to wait for Bitcoin to deviate away from the moving average. Okay? Because if they can move away from this point, if they move away from this, you've got the volatility and you've got a gap in the 50, well, you're only coming back into this area here and this area here. So you've got the deviation away from the 50 EMA. It might not be big, but if they use smaller candles to move higher, happy days. But if they use bigger candles, then you won't really see the 50 EMA present the gap. What they would need to do is exactly this. Here we go. You see here? Price is at the 50 EMA zone. Right there. They move up slowly. And then they push higher, higher, and higher. So they're clearing the gap between the 50 EMA. You're looking to draw this box. You can draw this box right here. Happy days. I hope this little strategy does help you out, because this is exactly what I do when I trade. I'm only looking for this. I'll go onto the 1-minute time frame, 15-minute time frame. You know, I'm always looking for it. Okay. Here we go. We've got Bitcoin moving down. Let's have a look on the 1-minute time frame for a split second just to see if there is anything down here. Red vector wick right there. That might be a promise. We've got the violet vector wick right there. They're forming the low. But remember, price is flat. So we haven't got the deviation just yet from the moving average. Remember, you want price to deviate away from the 200 EMA rather than the 50 on the 1-minute time frame, because the 50 EMA is acting like a 5 and 13 EMA combined. It's too compressed. Okay, you might look at this and think, oh, it's trading away from the 50 EMA. Let me go short. Well, guess what? You've gone short. Now, blue vector candle's coming in to recover the red vector, and it might even continue back up from that zone. So you've got to be very careful. Oh, vector recovery on the wick. So I hope that makes sense to you guys. I hope it's not taking too much of your time while price action ain't doing much. But more importantly, I'm going to give you a breakdown tomorrow and give you the whole story of FOMC and what I think is likely to happen, because it's a very, very difficult time. 25 basis points may be on the card, or a pause, and the market's going to get ready to do something explosive. We've got options expiry as well. So again, once those options expire and once the FOMC is done, it will be a safer environment to take into consideration to trade. All right? But I hope this strategy has served you in some way. Mad love and respect, ladies and gentlemen. I'll get the high block charts attached to this video as well. Take care of yourselves. Peace.